You never want a serious crisis to go to waste. And what I mean by that, it's an opportunity to do things that you think you could not do before.
Can you imagine that in 10 years when we are sitting here, we have an implant in our brains, and I can immediately feel, because you all will have implants.
Just think of sensors planted into our brain.
It doesn't change what you are doing. It changes you if you take a genetic editing.
It's decarbonization of the economy.
Where are they traveling? How are they traveling? What are they eating? What are they consuming on the platform? So, individual carbon footprint tracker. Stay tuned. We don't have it operational yet, but this is something that we're working on.
This global reset is necessary.
It's at the end, what the fourth industrial revolution will lead to is a fusion of our physical, our digital, and our biological identity.
That we understand the hardship that high inflation is causing, and that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 0.5 percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we're continuing the process of significantly reducing the size of our balance sheet.
The Governing Council today decided to raise the three key ECB interest rates by 50 basis points, and based on the substantial upward revision to the inflation outlook, we expect to raise them further. In particular, we judge that interest rates will still have to rise significantly at a steady pace to reach levels that are sufficiently restrictive to ensure a timely return of inflation to our 2% medium-term target.
Inflation is too high. Let's start with that. Now, we think we've seen possibly this week, the first glimmer that with the figures that were released this week, that it's not only beginning to come down, but it was a little bit below where we thought it would be, and that's obviously very good news, but there's a long way to go. And and we expect that to happen, by the way. We expect inflation to start falling more rapidly, probably from the late spring onwards. But there is a risk that it won't happen in that way, particularly because the labour market and the labour supply in this country is so tight. And that's why, really, we had to raise interest rates today, because we see that risk as really quite...
But they don't produce inflation for one simple reason. They do not own a printing press on which you can turn out green pieces of paper. The only such printing press is in Washington. I say printing press, of course, in the modern age, we do it in a more sophisticated way. We use bookkeepers and accountants and computers. But it comes down to the same thing. Inflation is made in Washington because only Washington can create money. And any other attribution to other groups of inflation is wrong.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And we have the central banks with the same message. They're moving in lockstep to raise rates, roll off the balance sheet to fight inflation that they caused. And it's all for the fourth industrial revolution. But in order to bring in the fourth industrial revolution, they have to destroy the legacy market. And that includes the way banks do business. There's definitely going to be an event that's going to shock the global economy. We know the BRICS nations are ditching the dollar. And then also, guys, we have Israel buying the yuan. And because we're going to be moving over to digital currencies, this will speed up the process of destroying the dollar. And this plan has been in process since 2014. And we know what the NWO goes off, 10 years is the manifestation period. And we know the digital yuan goes live in 2024. The central banks are destroying fiat currencies right in front of the masses' eyes. And they're going to set up a magic trick that's going to distract the masses long enough in order for them to land into the fourth industrial revolution. And remember, the crypto teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
And their rate hiking cycle. Josh Lipsky, friend of the show from the Atlantic Council, points out that in the past, it may have seemed like central banks were all operating on a united front to control inflation. But 2023 is going to look a lot different. This chart shows the variation of central bank projections across the globe, something we can likely expect to take effect next year as countries shift their focus on their own economic issues rather than focus on global forces. And to the conversation we had earlier, you see Japan at the right above China.
To the 6th annual conference of the European Systemic Risk Board. When historians look back on our times, they may well say we live through an era of poly and perma crisis. Ooh, what is that? An array of powerful shocks, one after the other and together. The pandemic, Russia's unjustifiable invasion of Ukraine, the energy crisis, to mention a few, have hit the global economy in quick succession. This unstable environment poses sizable risks to financial stability in Europe. And those risks are further heightened by a weakening economic outlook. At the same time, monetary policy is adjusting to ensure that high inflation does not become entrenched and that inflation returns to 2% over the medium term. This is our economic outlook. We should not be complacent. It remains important that banks make adequate provisions and undertake prudent capital planning. They should be attentive to credit risk and remain alert to potential flaws in their internal models as the risk environment evolves. Banks also have a key role to play in contributing to resilience by having good visibility of near-term liquidity risks and concrete plans to tackle them. Strong cyber defenses and the ability to withstand fire sales and the associated mark-to-market hit on assets held on their balance sheets. If not managed properly, these are all types of risks that are particularly likely to amplify and propagate shocks throughout the financial system.
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.